Hello, and welcome to today's Tax Talk presented to you by H&R Block for all couriers on the Skip network. My name is Lisa Gittens. I am a senior tax expert with H&R Block, and I will be providing you with the general information required to prepare your 2020 tax return. H&R Block is Canada's leading tax preparation firm with over 55 years of experience in preparing all types of tax returns. We're currently serving more than 2 million Canadian tax filers every year. We have over 1,000 offices located nationwide. We are training 7,000 tax professionals on an annual basis, and we are here to provide year-round support for all our clients. H&R Block currently offers an exclusive flat rate pricing for couriers on the Skip network, and this is not available to the general public. This results in significant early bird savings for you over the general cost of the return. Your returns are always completed by a senior tax expert. This is treated as a small business return, meaning that it can take between 1.5 to 2 hours to complete, and your senior tax experts are specially trained to complete the small business return on your behalf. H&R Block offers exclusive flat rate pricing for couriers on the Skip network. These discounts start from January 1st to March 15th, and that early bird pricing brings your return to $159.99, including all forms and schedules. If there's a delay and we're filing March 15th to mid-April, April 14th specifically, our pricing will then be $199.99 per return with all schedules. And for those who are coming in at the end of April, April 15th to April 30th, we have a late season pricing of $259.99. So no matter when you file with us in the season, you're saving anywhere from $55 to $155 with exclusive early bird pricing. On our agenda for this tax talk, we will show you how to report your income, what you can and cannot claim on your taxes, what are capital expenses, what would be the process for you to follow should you be audited or assessed by Revenue Canada, how to report your income. You are considered an independent contractor for taxation purposes with Canada Revenue Agency. You will not receive a T4 slip at the end of the year from your employer. You're not receiving the T4 slip, and therefore no tax is withheld, no Canada pension or employment premiums withheld from your income. As that independent contractor, you will report your income on the Form T2125 Statement of Business or Professional Activities. There are 6 pages to this form. You're going to include all details about your business, including the location, the types of expenses, the time of year when you earned this income, as well as reporting expenses paid. In order to accurately report your income, you will receive a summary of your earnings from Skip the Dishes. The summary on your screen shows the delivery fees that were paid to you, any other fees or amounts paid directly to you, your total fees being $21,000, as in the example, and in addition, this particular courier earned $3,000 in tips, so a total of $24,000 will be reported as gross income on his T2125. An important tip to keep in mind is that you as the courier should keep a record of any cash tips received. Skip the Dishes will only record your stated tips, which means the amount the client recorded at the time of the transaction. That amount will not include the cash tips that the customer may provide to you directly, and all tips are taxable income and should be reported on your income tax return. Moving from income to expenses, let's look at what couriers on the network can claim on their tax return. You can deduct any reasonable expenses incurred to earn business income. For example, you can deduct the fees that you paid to Skip the Dishes for signing up, any required examinations, background checks, those are deductible on your income tax return. The thermal bags that you purchase in order to keep the food warm during deliveries, that is a deductible expense. Your cell phone, you're using it to track the orders and your clients. A percentage that you're using for business time is deductible as an expense, as are the costs of operating your vehicle while using it for business. Let's look specifically at those vehicle operating costs. So the business use percentage of operating your vehicle will include all of your gas and oil receipts, your annual insurance premiums, as well as any license and registration fees paid in the year, the maintenance and repairs that you completed while using the vehicle for business purposes, any interest cost that you pay if you have a car loan. Now, it is the responsibility of every courier to keep a record of the business use versus personal use. Specifically, Revenue Canada requires you to have a vehicle logbook, which shows the total kilometers you've driven in the year, as well as the total kilometers driven to earn business income. And based on those kilometers, that is where Revenue Canada determines the exact percentage of your expenses which can be deducted from your business income for the year. With your vehicle, some expenses are fully deductible within the year. For example, the parking and the repair costs. You paid for the repair in the tax year, and it was paid for during a time when you were using the vehicle for work. 100% of that cost is deductible on your return. If you completed those repairs for an incident or while you were using the vehicle for personal use, there is no part of that cost that can be claimed as an expense against your business income. Always good news, you can claim the fees that you pay to have your taxes prepared by a professional. That is a deductible business expense. Shifting from those current expenses to capital expenses. So that capital expense is anything that gives a lasting benefit or advantage, helps to maintain or improve an asset. And in most cases, that asset is your vehicle. So we all agree that the cost of a vehicle can be quite substantial when you're starting out a small business. Because your vehicle is a capital expense, this means you cannot write the cost off all at once. In the year that you start using it for business, you can claim 45% of its value at that time and 30% per year after. So in the year that you started using the vehicle, you're going to add it as an addition to your capital cost classes on your return. And for that first year, 45% of the value of the vehicle will be added as a business expense. That 45% is only in the first year, and for every year after, as long as you own the vehicle, 30% of the value will be a deductible business expense. So keep in mind, we've touched on things like your supplies, your thermal bag. We've looked at deducting the cell phone usage and the vehicle. Things you can't claim are your personal or unreasonable expenses. For example, any clothing. As an independent contractor, unless it is a branded uniform, there is no tax deduction. No tax deduction for dry cleaning fees for clothing either. Designer sunglasses. Yes, as a driver, this may be an asset, but no deduction on your tax return. Haircuts and manicures. Your presentation is important, but no tax deduction. Any ornaments or fixtures in the vehicle, no tax deduction. Any meals consumed by yourself if eaten while on the job, and any fines or traffic tickets incurred while using the vehicle for business are not deductible expenses. A reminder here to focus on expenses you can claim, like vehicle expenses, and a tip to keep a logbook. In that logbook, you'll be able to record the expenses related specifically to the business use of your vehicle. You'll be able to track the kilometers that you've driven for business. And this is where the log will be helpful if you are ever audited or assessed by Revenue Canada. By keeping clear record of the kilometers driven, total kilometers, which means the odometer reading at the beginning and the end of the year, and then tracking each individual business trip or trips driven within a specific day, validates how you calculated your percentage, and it validates that the expenses were incurred while you were earning income. The logbook goes hand in hand with your records. The receipts must include a description of the goods or services purchased. If you're filling up at a gas station, you're going to need more than your ATM slip or just the credit card statement. The receipt must show the name of the gas station, the quantity consumed, whether there was any tax charged, and the total amount. So the tip here is please pay separately for your business gas and pay separately for your personal expenses so that you have clear receipts in your logbook for deductible and non-deductible expenses. So income tax installment payments. Here's a gentle reminder that because you're not receiving a T4 slip, there is no tax withheld at source from your business income, and you may end up with a large balance owing when you file. Now, if you're in any province and territory except for Quebec, when you file your 2020 return, if your balance is $3,000 or more, and you owe tax in the 2 prior years with a balance of more than $3,000, you are invited by Revenue Canada to begin making installment payments, which means you are prepaying your taxes for future years. In Quebec, that amount is if your tax is more than $1,800, Revenue Quebec will then invite you to begin prepaying your taxes on your business income. Installment payments are different than a payment plan, and the only way to have installment payments with Revenue Canada is if they send you an invitation letter in the month of August after you filed, and they will lay out the payment dates and the amounts. Typically, your first payment will be due in September. Again, An installment payment request is different from your setting up a payment plan with Revenue Canada. We want to remind you, we've been discussing how to report your income and expenses on the T2125, which is one form that makes up your income tax return. When you file your income tax return, your tax calculated is based on your income. Another thing that is calculated based on that income are any federal benefits you may be entitled to. The Canada Workers Benefit is a refundable benefit that could either reduce the amount of tax you owe or give you cash back in your hand. When you file your income tax return, you will calculate the Canada Workers Benefit. If your working income is $8,538, the maximum amount you would receive for the Canada Workers Benefit would be $1,381. If your net income is more than $13,000, but less than $24,000, you'll still get a part of the benefit, but it is reduced. And if as a single individual, your net income is more than $24,000, you will not qualify for any part of this benefit. The way to know if you qualify is to file your tax returns. So remember, we've been discussing income and expenses and some of the benefits when you file. Also remember that as a Skip the Dish courier, the network has charged GST to the client. You yourself do not collect GST. The delivery service that you provide is 0 rated by Revenue Canada. However, you can still register with the GST department in order to claim any input tax credits to recover the GST you paid on your expenses. The GST return is a separate return filed after your individual tax return. As promised, let's discuss the process should you be audited or assessed by Revenue Canada. No one wants to receive an audit or an assessment with Revenue Canada, but it's important to remember that even when your return has been 100% accurately prepared, it can be reviewed. Most audits are no longer conducted in person. You will receive a letter from Revenue Canada asking you to submit the required documentation. And as long as you have kept your paperwork for up to 6 years after you file to back up the claims on your return, you have nothing to worry about. The important thing that we want to stress here is when you receive that letter from Revenue Canada, you must respond within 30 days. Now, if you don't meet that deadline, you can contact them to arrange an extension. But where possible, respond by including your copies in the mail to Revenue Canada or upload the documents through my account within that 30-day period. If then you are reassessed, they have reviewed what you've submitted, and you disagree with their decision, you can take it one step further and file a notice of objection. So in addition to our flat rate pricing, we offer Peace of Mind. Now, Peace of Mind is an extended service plan offered to all of our clients. This ensures that we have prepared your return to make sure you have the maximum refund guaranteed with your income and expenses reported correctly. If you are audited or assessed by Revenue Canada, we will not only review the letters with you, we will gather together the documentation and submit it to Revenue Canada on your behalf. And we are there not just during the tax season, but this guarantees you year-round support. If in fact we have made an error that results in up to $3,000 of additional tax, we will cover your penalties and interest. Whatever package you choose, you are always covered under the H&R Block Advantage. Even during these times, here's what you can expect when you visit an H&R Block office: a personalized interview about your tax situation, a free estimate and upfront pricing, and your best tax solution for you year-round with our maximum refund guarantee. You can continue to file with H&R Block even in the midst of COVID-19. Please stop by your local office. We have safety measures in place to ensure you can file your taxes safely. Alternatively, you can book an appointment by phone with one of our tax experts to avoid any wait times. You're also able to drop off your documents during office hours, and a tax expert will complete your return with the interview conducted over the phone. Alternatively, you can upload your documents on hrblock.ca. Our website gives you access to retail and online services, and we have a checklist available to make sure you have the correct documents so that your tax filing is quick, safe, and efficient. Thank you.